Good afternoon. Welcome everyone to our business growth workshop. Really, really good to have you here. Haley, nice to see you, girl. Welcome. What are we going to be doing today? Well, this is part one of mastering your finances. Normally, it's a subject that people run away from at a great rate of knots because money and finances and business can be hard. So we're going to do this in two sessions. Part one this week, part two in a couple of weeks' time. And again, let's talk about the secret weapon that you have. This is the Peak Performance Business Accelerator process. It's the 7-step business growth roadmap to success because every business needs a system and needs a process. And the thing is that business is never ending. That's why this is an infinity circle, as you can see. And we're talking about the 7 M's: mindset, the market, media, machine, members, money, really important. That's what we're talking about today. And then mentorship. This roadmap looks at ensuring that we clarify your vision, controlling the velocity so that you're not working flat out or too hard, but doing the right amount of work to get to where you want to get to, and about creating value. And especially creating value when it comes to money is in business. If people are money conscious and are asking, can you give us a discount? It means that you haven't created value. And in business, when we can create value, then the money issue goes out the window. So we're going to create value in the business. First question though, how did you get on with improving your time mastery by using the power plan? Did you stick to it to the first time? How strong has been your personal discipline, or have you given up? Thanks, Alan. You liked it? Yeah, okay. That's good. Good to know. Thank you for that. So let's have a look about money, finances, knowing your numbers. Question: why do we keep score in sports teams or games, but we don't think we should do it in business? Because if you didn't keep score in football or in rugby, then how do we know who's won or not? Possibly we might look at who's won by who's got the nicest uniform, or if the ladies are on the call here, who's got the nicest legs, for instance. Remember when we used to have participation in school games? What's the first thing that the kids asked for when we came off the court? Who won? But the problem was we were scared to hurt their feelings because, oh, what if they lost the game? But the thing is, in life, we're going to win and we're going to lose. So it's fundamentally important that we keep score, because if it's good enough for the kids to ask what's the score at the end of their game, as opposed to this participation, it's good enough to keep score in the business. You're not going to get your feelings hurt if you know the score, even if the profit doesn't look good. You are going to get your feelings hurt if you don't keep score and all of a sudden 2 years later you've gone bankrupt and have got no business. So it's fundamentally important to keep score. And the thing is, until you know the score, you can't know what direction your business is going in. That's the whole reason we keep score. So I'm here to help you make some serious money in your business, because realistically, that's why we got into business, isn't it? To make money, but also to help you be accountable to achieving that. So let's get on with it. I expect my clients to be 100% like me. No, doubt it. That would be terrible if you were like me. But what I am wanting to do is to help you to be accountable to yourself, because it's you that you need to look in the mirror each night and say, I've done a really good job. Because you can cheat the world, but you can't cheat that person in the mirror. When we looked at the line of choice, and remember we did this a few weeks ago, we were looking at playing above or below the line. And we talk about this often because many people play below the line. You know, who are you blaming? What impact is that excuse or that denial having on your business? But when we actually play above the line and be responsible for the outcomes, be accountable for what's happening in our business, whether it's good or bad, because even if it's bad, we know what we need to do to then ensure that it becomes better. And we take ownership of the choices that we're making. Many people don't like that for the simple fact that it holds that accountability. What if I'm not doing well? Well, that's not the point of it. If you're not doing well, at least we have a base mark, a benchmark to know how we can improve. Because if you don't know, you can't make any changes in that. So the three or the key mastery areas we're going to look at is your profit and loss, your balance sheet, the break even, cash flow, and investments. Now the question is that, do you all know these terms? And if you don't, then please find out. Please ask Janelle or I, or go online, Google it, ask your accountant. Because if you don't know what these terms mean, how will you know what happens when your accountant gives you your P&Ls at the end of the year? And remember this, money is a measurement of the value that you have created in the world. So if you're making lots of money, you've actually created value. And don't be scared to make money. I hear so many business owners are scared to say how much money they're making, or they're scared to actually show themselves how much money they make. Oh, isn't that too much? No, because if you've made money, it means you've given value to someone else. So always remember that when you're making good money, it's the value that you have created in the world. Here's another thing. You can go bankrupt if you're profitable. That's right. So many people don't know that. However, if you've got good cash flow, you can't go bankrupt. Well, pretty much you can't. So that's why it's important that we will teach you to have good cash flow. And we're going to show you a cash flow forecast later on today, as opposed to thinking that profit is the be all and end all, because cash flow is king, as they say. What's that saying? Revenue is vanity, cash is clarity, I think it is, and money is reality. Now, most business owners like discounting. It's one of the worst things that you can ever do in your business. You've got to give away value and stop discounting, because it hurts your business so much, because when you discount, you've got to make up bigger margins. Now, the thing is that you've got to not be scared of increasing your prices. Be confident in the value you're offering, because remember, it's a measure of the value you're giving in the world. So we've done this little table for you, and it indicates the increase in your sales that are required to compensate if you're going to discount. So let's have a look at it. If you've got a margin of 40%, go up there to have a look at your margin percentage. And if you reduce your price just by 10%, you're going to need to increase your sales volume by a staggering 33% to maintain your profit. Now, really, has such a strategy worked in the past? And it sure as hell ain't going to work in the future. Conversely, let's look at if you increase your prices. Because when you adopt a premium pricing strategy, this table then shows the amount by which your sales would have to decline following a price increase before your gross profit is reduced to below its current level. For example, at the same 40% margin and a 10% increase in your price, you could sustain a 20% reduction in sales volume. How cool is that? And the thing is, when you give value, you don't need to discount your prices. And the other question I've got to ask you is, when was the last time you actually increased your prices in your business? You should be doing small, regular updates all the time. Because if you wait, say, 2 years and then do a 15 to 20% increase, people balk at that. But if you're doing 1 or 2% every 6 months or so, it makes it so much easier. Please, if you get something out of today, don't discount your prices anymore, but don't be scared to increase your prices. And here's the thing. What happens if you increase your prices and no one started to buy from you anymore? Quite simply, you revert your prices back down to where they were. Simple as that. If you discount your prices, though, then it's really hard to come back up. Now, here's a sheet on 5 areas that you can increase your profit and have a look at this over the next 2 weeks, because next time we're going to be looking at the profit chain. These are the 5 key levers that you're going to be able to utilize to ensure you're increasing your profit by 61%. You're right, you heard that right, increasing your profit by 61%. So the thing is, look at these areas that have worked in the past, the areas that haven't worked, the reasons they haven't worked, and what you need to do. And then we'll show you the profit chain. And also later on, we've got the revenue growth accelerator, which we're going to share with you as well. The big thing is that, and this comes from Warren Buffett, who is a legend in the financial industry. He says, if you can't read the scoreboard, you don't know the score. And if you don't know the score, you can't tell the winners from the losers. Exactly what I was saying before about the reason we keep score in sports games. If it's good enough to keep score in sports games, why don't we keep score in our business? You must learn to understand the numbers in your business to have the long-term success that you desire. If you don't know the numbers, then you don't know whether the business is working correctly or not. It's not enough just getting the numbers as well. It's actually knowing what they mean. And we teach all our clients to know their numbers so that when you talk with your accountant, instead of him trying to explain what your P&L means, you can actually go and say, oh, Mr. or Mrs. Accountant, I understand my numbers here. Okay, so what can we do to mitigate my tax? What can we do to minimize my tax? Let's have a discussion on that. It's a totally different discussion having that than trying to understand what your P&L is. That's why I said right at the start, get to know what these terms mean. Because when you know your numbers, it equals knowing what to do and having that good conversation with your accountant so that they know that they can't blow wind up your backside. There's 3 financial scoreboards that we're going to look at as well. Your profit and loss statement, really important. I love looking at that, especially when I don't have brackets at the bottom around my P&L. When I see a healthy profit, it's fabulous. We want to have a look at the balance sheet. And we want to have a look at the statement of cash flow. Now, what does a profit and loss statement tell us? Well, there's 3 things. It tells us the sales, the expenses, and the profit that we make. But we need to know the balance sheet so we know what are our assets, what are our liabilities, and what is our equity in the business. The statement of cash flow, they tell you 3 things as well. What's your operating cash like? What's your investing cash like? And what's your financing cash like? Remember, cash flow is important. And if you understand this, it makes it so much easier to run your business. So a P&L statement will kind of look like this. You've got sales of 150,000, expenses of 100K, which means that you have a profit left over of 50K. All right. Again, in your P&L statement, they are extrapolated out when you're looking at your accountants. But basically, you got your sales, you got your expenses, and what is left over is profit. And it's always good if you don't have brackets around the profit. The balance sheet will look at your assets. You'll have a home, say, worth 220,000. The liabilities, the mortgage, might be 180,000, which means you got equity of 40K. Quite simple, and I've made it as simple as possible here. Your cash flow statement might have an operating cash flow of 50K. It might have a negative of investing of 30K, and it might be, because you're financing, minus 25K. The cash flow statement comes from the other parts of your financial scoreboard. Really important that you understand that. Now, do you have a financial team? I'm sure you all do, and most of them will have an accountant in there. But who do you hire and what do they do for you? Well, let's have a look at that. What are the roles of the accountant? What are the roles of the financial controller? And what are the roles of the bookkeeper? Now, you might have all 3. You might only have 1 or 2. That's absolutely okay, because depending on your business determines how many of these people you need in your business. Why are they important? Well, quite simply, Nobody's great at all three of those areas. It's the same in your business. You are really good at some areas of your business, but in others, not so good. And that's why you have staff, and that's why you delegate out to your staff. So the thing is, you want them to catapult you forward versus having a train wreck of a business. And let's face it, how many have you seen of other businesses where it's a complete train wreck and you think, thank goodness that's not for me. And the reason yours won't be a train wreck is the fact that you're here today learning. And I congratulate you all for that. And thank you for being here. So what do they do? Well, the accountant does your tax returns and your payroll. The controller looks at the money in and the money out of the business. And the bookkeeper does the invoices and the receipts. Now, I want you to do something for me. If you're not happy with any of these three, then I want you to interview someone better. Quite often, and it's with our solicitor as well, we think, oh, they're the professionals. We just go and do what they say. Please interview your accountant, your controller, or your bookkeeper to ensure they are the right fit for you. Because remember, they work for you. So make them work and interview them until you find the right ones for your business. Don't be scared to leave your current accountant or controller or bookkeeper if they're not doing the right job for you or giving you the financial advice that you need for your business in a timely manner. And I kind of think having that having that knowledge should come monthly in your monthly financials. Know your numbers so you can have a proper conversation with them and they can't blow wind up your backside. All right. And as I said before, with your accountant, if you're understanding your profit and loss, you can then go to them and say, okay, as a result of these numbers, how are you going to help me mitigate my tax returns this year so I legally pay less tax? Always pay tax. I'm a firm believer in paying tax for the simple fact that your tax allows us to maintain our roads. It maintains the rubbish guys who are going around doing the job. It's really important that everyone pays their fair share of tax. And it guts me when I see these people, these huge companies that get out of paying their fair share of tax within the environment, within the country that they're operating and working in. Don't get me started on that. That's just a totally different conversation. Cash is king. And the question I often ask people is, how many months is acceptable to pass before your business turns a profit? I often hear business owners say, oh, I expect to make a loss in my first 6 months, or I expect to make a loss in my first year. Why would you go into business to make a loss? You need to start making a profit from month one. That's why you went into business, isn't it? So how many months is acceptable? 0 months. How do you do that though? Well, quite simply, it's about having the right mindset and setting up the right structures in your business, the right processes and systems right from the start so that you do making a profit. It's fundamentally important. Okay, let's be fair about it. Your first 1 or 2 months, there might be a small loss in there. That's okay because you've got some capital to tide you through. But it's not acceptable to think that you can wait 6 months or a year to make a profit in your business. You've got to make a profit as soon as you can. And don't let anyone ever tell you, oh, it's okay if you haven't made a profit in the first year. If someone says that to you, run as fast as you can away from them because they are not the right person to help you with your business. 4 myths that business owners will often tell themselves. I'll pay myself after we turn a profit. Number 2, I have to pay my expenses before I pay myself. I'm reinvesting all my money back into the business for growth. Goodness sake. Always pay yourself first, and then we get to the other stuff of the expenses. It's amazing how turning that around turns the whole business around as well. And number 4, I'll become profitable once I sell more. Really? How come you're not selling more now? If you don't know how to sell, get out and learn. Get out and understand what are the objections that you need to overcome for your business. Get out and understand how to give and create value to your clients so that they say, wow, I want another three of those. Now, here's the thing. You can't grow out of your profit problem. You need to fix your profit problem, then you grow. Now, that's not me. That's Mike Malkowitz saying that. And I absolutely have to agree with that. It's a great statement. You can't grow out of your profit problem. You need to fix your profit problem, then grow. Now, the traditional way, often following this method, where sales minus expenses equals profit, there is no profit as the expenses are greater than the profit. So we need to understand how do we mitigate that. That's a traditional way. So think about it from this alternative point of view. Sales minus the profit, paying yourself first. We now have the pounds to pay. Gosh, so, hey, I've just realized also we got pounds in here instead of dollars, eh? Again, as you know, I've just come back from England. We've just driven home overland, and I need to change these slides to New Zealand dollars and not pounds. Forgive me, I'll put my hand up for that right now. So now that I've said that, it's about getting your piggy bank process correctly aligned so that you're making a profit and then you pay the expenses after that. And here's the thing, each business should have at least three bank accounts. That's right, three. One for your profit, one for your OPEX, and one for tax. If you haven't got a tax account, please open one because so many business owners are scrambling at the end of the year to pay their tax. The thing is, guys, the tax isn't your money. It's the government's. So don't use it during the year. As soon as the tax comes in, all right, put it into a separate account so that when the end of the year comes along, you can just give it to your accountant. They put it into your P&Ls and it's taken care of. So many business owners struggle because they don't, or they use the tax for their OPEX or running the business. Please don't. Another thing to take away from today, please don't use your tax. It's not your money. When you're doing your financial analysis, you're looking for the trends in the business. And what I mean by trends is what's operating well, what's going well. Okay, let's do more of that. What isn't working well? What are the trends that I need to fix? And this is why we need to look at 2 to 3 years of statements, of bank accounts, of P&Ls, so we can see what the trends are. Looking at the balance sheet, where are the trends there? Are we getting more assets than our liabilities? Always looking for trends. And once you've identified the trends, then acting on it. There's so many business owners who we will talk to and they say, oh yeah, I saw that happen a couple of years ago. Well, my question is, if you saw it happen a couple of years ago, how come you haven't done something about it? Because you've put your head in the sand. And the thing is, in business, guys, that stuff isn't going to go away. All right, it is going to keep rearing its head until we do something about it. So the thing is, you need multiple reference points side by side to understand what are the trends. That's why we're looking at 2 to 3 years of financials to see what is going really well, what isn't going particularly well. And then compare the data in 4 different ways. Have a look at your raw data. Have a look at your monthly average. Have a look at the common sized issues. And then have a look at your cost per units if you're into retail. If you're into a service industry, it's a little bit different. But it's always important that you compare data all the time because, as we know, numbers don't lie. All right, it's very black and white, unlike English, where we can say or change English around. The most important scorecard, though, is the 13-week cash flow. And cash flow is only a projection, all right? And it's only an opinion until it's measured. All right, it's not a budget. Cash flow is a projection to help you understand what's going to happen in the next 13 weeks so you can look at trends again. Is it going in the right direction or is there going to be a blip in the radar that I need to fix? And the thing is that none of this is going to work without accurate intel. That's why you need to know your numbers. However, it kind of works a heck of a lot better than no intel at all. So always get the intel to do that. So who should create that cash flow forecast? And I often ask clients, and they will say to me, oh, I think the accountant should do my cash flow forecast. So I have to ask, why? And they go, well, they're the experts. They would know. Well, I'm going to disagree with you because you should be creating your cash flow forecast. You've got to be responsible for yourself and your business. Bearing in mind, your accountant and your bookkeeper, they're dealing with a lot of other people's businesses. So why should they be extra special to look at your one? So that's why it should be you to actually do your cash flow forecast. Don't expect others to do it for you. Life doesn't work like that, as we already know. So when you create your cash flow, you actually now know your cash flow. And that's the reason that you do it. Now, let me be quite clear here. In our relationship with Janelle and I, who does our cash flow? I can stop. It's all right. I know. Yes, you're saying Janelle. I know that. And quite correctly, because she's really good at it. However, once she's created the cash flow, she then sits me down and says, Pete, this is where I think we're looking for our next 13 weeks. And of course, I nod knowingly, but every now and then I'll have a flash of brilliance and I say, oh, hang on, haven't we thought about this here at week 7 or so? And Janella will go, yes, I've already thought of that. That's why it's down here. And I go, okay, great. Or just every once in a while, I will say, oh, shouldn't this be in week 7? And Janella goes, oh, well done. Didn't catch that. That's great. So why 13 weeks? Well, quite simply, it's a quarter. It gives us a good appreciation of what that next quarter looks like. Now, let me tell you a story. Dave and Katie were clients of ours, and we got them to do their 13-week cash flow forecast. They noticed at week 10, there was a big blip that there was no cash, and they couldn't understand why, because everything else had been put in there, and this just came up. So they then reviewed their income and all their purchases. And what they saw again, which they had forgotten about, is that they had a payday loan that they'd taken out a few months previously that was coming due on week 10. And this seriously impacted on the cash flow. Now, as they quite fairly pointed out to Janelle and I later on, had they not done the cash flow, they probably would have got to the day or a couple of days beforehand and realised that they would have had to come up with all the money for this payday loan and not had the money for it. So Janelle and I told them to go to the bank to get an overdraft just in case they needed it. We were going to work on the sales for the next 10 weeks, but go to the bank to see the bank manager and get an overdraft. Well, guess what happened? The bank manager burst out laughing at them. And Dave became quite indignant. And he said, hang on, why are you laughing at us when we come to you to get a loan for in 10 weeks' time? And the bank manager smiled and said, that's the thing. Most people come to me the day before they need it or the day after. I've never had anyone come to me 10 weeks before to say, we might need some money here. He said, it's just a breath of fresh air. Thank you. Dave thought, oh, it's pretty good. He came back and told Janelle and I that story. So again, had they not had the cash flow forecast, they would have been really in the crap. The corollary to the story is they went back to the bank manager and said, don't need the loan. We've actually traded our way out of it because they did good sales, good training, and they made a lot more cash. And the bank manager said to them, I kind of thought that might be the case. That business coach that you're working with, can you give us his name? Because we want to have a chat with him as well. I think he could help our clients. So that's what happened from that. Can I ask, does Usain Bolt just turn up and run? Or does he train and look at his running numbers to get that small percentage even better? Now, I think you know the answer to that. And like all elite athletes, they're looking at their numbers to get that small percentage to run that tiny minuscule faster so that they win as opposed to being third, for example. That's how important knowing your numbers is. The question is, what kind of business are you wanting to own? Just one that's average, that's coming in third, or the elite athlete side, like Usain Bolt? That's why I put a tick in the box there so you can see that. Having a 13-week cash flow forecast is like having regular blood work in your body. It keeps flowing around and works all the time, because if the blood in your body stops working, what happens to you? Quite simply, you fall over. So we need to have the cash flow forecast working in your business so your business doesn't fall over. So the question is, how do you do it? Well, I think I might be able to help you with that because we've got a cash flow forecast. And what I'm going to show you here is our example of a cash flow forecast. You might have your own already. Compare it to what I'm giving you here. And if you think yours is better or just as good, keep using it. That's absolutely fine. If you think ours is better, then please ask. We'll happily give you a copy. But everything that we offer to you is an opportunity for you to compare. What am I doing now? Can I do it better? Or no, I'm actually doing okay, but that was interesting to see, so I can make the comparison. So with your cash flow forecast, or our one here are the starting instructions. So you enter the start date in the week ended cell. That's the ones highlighted in grey. All the blue ones, they will extrapolate through to you from the next two sheets, which I'll show you. But the second, enter the opening balance, bank balance for the first week. Again, that's highlighted in grey on the left-hand side there. Enter the starting credit limit or the overdraft limit in the credit limit cell. Again, highlighted in grey. As I said, the blue numbers will extrapolate through from the cash in and the cash out pages. And I'm going to show you that now. So let's have a look at cash in. So go to your cash in worksheet and enter the list of main debtors or creditors. We've got 14 areas here. If you've got more than 14, then just insert the additional rows. Use minor debtors for small, least important clients. You might even combine some of those together. Entirely up to you. You work it how you want to work it. In the cash in worksheet, enter the projected cash in for each week for the full 13 weeks. Let me reinforce again. Enter the projected cash in for each week. This isn't a budget. It's looking at what people are going to be paying you for the next 13 weeks. Remember, it's the forecast. And these numbers will extrapolate to the main sheet once you've put them in. And you'll be able to see what is the totals for each creditor, but also weekly, what are the totals that you're getting from all your creditors combined. That's on the bottom axis there. Then going to the cash out worksheet, that's the third one, and enter the list of your main creditors. Again, if there's more than 14, then insert the additional rows. Again, if you've got minor creditors, you might want to combine some of them together and just have one column there. In the cash out worksheet, enter the projected cash out for each week for the full 13 weeks. Now, again, it's the projected cash out. And you're going to be fairly good at this because you're going to know most of what the expenses are going to be as well. So you can put those in. But bearing in mind, it is still just a forecast. And these numbers too will extrapolate to the main sheet. So coming back to the first sheet again. And again, you can see the instructions are in here for you. At the beginning of each week, to keep it rolling, in the cash flow summary worksheet, enter the closing bank balance. If the projected figure is different from the actual numbers at the completion of the week. It's really important here that we can update our forecast to have actuals in here now. Then highlight column B and select from the menu format column, hide to hide in the column. And then go to the end of the cash flow summary worksheet and select the column for the last week and copy it. Then select the totals column and from the main menu select copied cells. That means it'll give you another week on top of what you've already done, so you can roll it. Oh, I'm just going to turn that off. Someone's phone. Sorry about that. And we've lost it totally. No, it's all right. I'll come back. There we go. Now, repeat this process for the cash in worksheet, but for the new week added in, enter the new figures for this next week. Cash in forecast, cash out forecast, right? And then you repeat it. That's a cash flow forecast. When you're looking at it, you'll see if there are any blips in the next quarter that you need to take care of, or how the financial transactions are going, or how the money coming in is going, as well as the expenses. It'll also help you look at, are there any major expenses that are going to come out that could affect your cash flow forecast for that week? So you can actually start to put in actuals. When you do this, you'll never, ever be at a time or a place where you think, jeepers, I didn't see that coming. Please, if you're not doing a cash flow forecast, do it now and start getting it going. If you need a hand, ask Janelle or I. There's only 4 things you've got to worry about: money in and when, and money out and when. Make sure that you get these things going, because when you have good cash flow, you won't go bankrupt. Now, the further into your future that you can see, or the obstacles that can be seen, the easier it is to avoid them. You just ask Dave and Katie, our clients, who had that 10-week blip that they were able to avoid. Now, problems just don't disappear because you close your eyes. Don't become the ostrich, because when you pull your head back out of the sand, or you open your eyes, the problem is still there. In fact, it's probably become bigger because you haven't done something about it 2 weeks ago. Do something about it now. Don't procrastinate, because when you do something about it, you're moving yourself forward. If your company doesn't work on paper, what's the chance of it working in reality? And when I'm talking about working on paper, I'm talking about on computers as well. If your company isn't working on it, what are you really working on in reality? So make sure you're doing this. It's so important, guys. There you go. That's the presentation for this week. First part of Financial Mastery. Questions for you. Where do you think you need more practice to improve your results in your financial game? What skills would you like to master to achieve success in the financial game? If you need more knowledge of the financials, go out and get it. Because the question is, what's missing from your skill set for you to know exactly the numbers that are happening in your business? Cool. In 2 weeks' time, we're going to look at the cash gap, budgeting, and we're going to give you the profit chain. I'm going to stop sharing now, and I'm going to stop recording. And if there's any questions, please ask, because I'm going to be here for the next couple of minutes.